Oh, good afternoon. As always, we start off with things on the Asian side where we saw Hong Kong markets closing more than 2% higher. And we did see an advance when it comes to the Chinese markets as well. Japanese markets closed for a holiday. Focus shifts to monetary policy decisions from the ECB and the South African Reserve Bank on Thursday. The ECB expected to raise rates for the first time since 2011. Market expecting 25 basis points as it stands at this particular point. However, tomorrow we'll also be looking at the CPI figures coming out of the Eurozone, hoping to give us some kind of indication. Even if we do get rates higher, it will still leave Eurozone rates, especially in negative territory. However, to talk to us about what to expect as we go into this week and also touch on what we've seen so far when it comes to US earnings season, we are joined by Gary Boyson from Rand Swiss. Gary, thank you so much for your time. So let's check in on the JSE. We saw Asian markets higher, European markets also climbing. Is that positive sentiment filtering through down to our markets?
Yeah, you can see it on all the charts behind us at the moment. It's a very, very positive day. Green across all the subsectors as well. All index up well over 2%. I don't think the top 40 had one red counter in it, which was lovely to see. We're seeing, I think, a lot of this is also coming just from a slightly softer dollar. So we're seeing the dollar index starting to fall. That's helping to lift, obviously dollar price commodities. That's lifting all things really. So a nice optimistic day. But as you say, we've got the start of the US earnings season at the moment. We've only had a couple of companies reporting. I think it's about 30 to 40 companies reporting. So still a long way to go. But it seems like 80% of them have beaten expectations. Now, the expectations aren't particularly high this time around. So we're looking for about 5.5% earnings growth in the US. And if we get that, I think we might see a little bit of a stabilization in markets and hopefully some more green days and them being able to be strung together in a row, which is what we're really looking for.
I'm going to throw a curveball at you here. When you look at our local markets, do you see a sign or sort of signs of a classic bear market sort of decreeping in, or is it a case where even if there were signs of bear market aspects, it's sort of hidden behind some of the well-performing shares in our local markets?
Yeah, I think so. South Africa, if you look at a bear market is typically defined as a market that's fallen 20%. So our market has done very, very well compared to international markets. There's no question about that. Now, are we going to be headed into a bear market? Are we going into a deep sell-off? I think we always have that stabilizing. We have a number of stabilizing factors, should I say? So one is commodity prices. As we've seen, when commodity prices go up, all the multiple commodity counters on our exchange do very, very well. That just helps to kind of soften the blow that we take, while a very tech-heavy index like something like the NASDAQ obviously gets punished a lot harder. At the same time, our market is split between those kind of value-based small and mid-caps and the big dual-listed international companies that are typically act as a rand hedge. So when you see almost the world going into risk-off trade, you see money flowing out of South Africa, you see the currency weakening, but that helps to support these dual-listed counters like Richemont or British American Tobacco or something like Naspers and Process as well. So I think our market has a lot of resilience in it. So while it might not end up being the best performer in over a very long period of time, it certainly does very well when you get these kind of bear market environments.
So on Friday we wrapped up the week looking at MTN and Telkom releasing that announcement where MTN is going to try and have another play at Telkom, maybe third time lucky, we don't know. What did you make of that announcement? Because there were some concerns depending on which analyst you follow on social media.
Well, I think one of the big concerns that anyone that sees an announcement like that immediately should be thinking is, what's going to happen from a regulatory point of view. We know that ICASA has already said that the big guys, Vodacom and MTN, have significant market power. So MTN being able to buy something like Telkom is just going to increase that dominant position in our market, which could potentially be very bad for customers just because of their almost monopolistic pricing. Now, there's all sorts of other concerns about how would you almost take the spectrum allocations and put them together. There are a lot of regulatory hurdles, and I think if this is going to be either an all-share deal or a cash and share deal where MTN takes Telkom off entirely, I think that probably is very unlikely, and we've got very little information about what the ultimate deal is going to look like at this stage. But my feeling is that you might see the mobile assets being separated, and those fiber assets coming out. And that really, I think, what is first prize for MTN is to try and get access to that. There have been some concerns also about just the ownership of Telkom. Obviously, the government, between the PIC and its direct investment, owning more than half the shares in Telkom. But you would get the sense with the kind of executives that sit on the MTN board, those kind of discussions should already have been done. So I think, the analysts that are making comments to say that, the government might potentially halt that kind of transaction, I would assume that the executives have already done that kind of backdoor negotiation already, and that they might be supportive of the deal. But yeah, it remains to be seen. It'll certainly be interesting, and I think it'll keep making news headlines.
Euro-dollar parity is something we've been talking about probably for the least past week or so, and we're going into an ECB meeting on Thursday. The theme and sentiment around the euro at this particular point, how are you feeling about it? Bearish?
I think yeah. It depends. So bearish, yes. I think Europe is in a much more difficult position than the US, but the markets are pricing it that way as well. So at the same time, you look at the collapse of the euro compared to the dollar. As you said, almost trading at parity. One euro is almost equal to $1 at the moment, which is astounding if you consider the collapse. But now, with that collapse having happened, is it enough or isn't it enough? Now, as you said, this is all kind of positioning ahead of the ECB meeting. Now, I think the expectations are overwhelmingly that you are going to see a 0.25% increase from the ECB, which will be the first one since 2011. It's been a long time since you've actually had interest rates rising in Europe, and I think how that impacts the underlying economies is going to be absolutely crucial. So already they're talking about unveiling this anti-fragmentation tool, is what they're calling it.
Yeah.
Now, what this is, different areas of the Eurozone obviously are very differently indebted. So when you start seeing interest rates going up, you're going to see the periphery, especially places like Greece and Italy, under an enormous amount of pressure, and that's going to create all sorts of political tension within the Eurozone as well. So they're looking for almost innovative tools to try and almost mitigate some of that pressure between certainly the spreads between, let's say, German bunds and Italian debt. So I think it's going to be a very interesting meeting, and we'll see how it plays out.
The other thing we're talking about is a possibility of a recession, and I'm wondering, if we are heading into a recession, what are you uncomfortable owning?
Well, at the moment, almost the same as the Eurozone, you're uncomfortable having debt, I suppose, is the key thing, because in recessionary conditions, recessions typically coincide with higher interest rate environments. So if you're looking at businesses, you're looking for businesses that aren't particularly geared, or if they are geared, they're geared for a reason, or they're geared at favourable terms. So there's, I think it's really trying to do that, even in, I suppose, viewers' personal lives. When you're going into recession, this is the time to be paying down debt. Try and get those interest payments as low as possible. We've seen it. We were talking about earnings season earlier, but Bank of America has just released numbers as well, and you can see deal making has just collapsed over the last little bit. So typically in a recessionary environment, those big deals, those big transactions stop happening. Maybe not between MTN and Telkom, but generally you'll see far more conservatively managed businesses. So I think the way to invest is maybe not look at the businesses that rely on that deal making, but rather go for businesses that are established in their industries already, that have business models that are very, very sustainable, low gearing, mature businesses. That's where I'd be putting the money currently, and then avoiding the more speculative stuff. Yeah.
All right, let's leave it there. Thank you so much for your time, and of course, perhaps we can, with tomorrow's discussion, look at what kind of recession scenario the market is pricing in at this point, as we talk about the recession and those themes get far more intense. Well, we're going to leave it there. Let's take a quick break. When we come back, we'll have more news for you.